My first experience with fraud here at Berkeley was we just lost Jen.
I pressed something. I have no idea what I pressed.
What is Berkeley doing to educate our customers about what fraud is, the importance of it, and the role that they play?
For us, from the SIU perspective for Berkeley, we're definitely having to make sure that we're providing that awareness and getting that out with the website. So on each of the Berkeley individual companies and the corporate website, we do have a report to fraud link that's on there that comes directly to us here within the Berkeley SIU to look at and look further into it. We're an internal SIU, so we are providing operations within WR Berkeley to all the Berkeley companies. And in that process, it's, the fraud awareness is not just within our company. It's to our policyholders too. It's also for any type of fraud tips that come in. We've seen great improvement in that over the years with success in what those tips actually are. A lot of them that do come in, we do have success in actually that information is really what cracks the case a lot of times. In some situations, you'll hear us where we reference, like we have informants in different scenarios like that, where this information is coming in. All that intel is what's needed to really start to defeat the fraud. And then, Tim, if you want to talk about specifics for environmental.
Yeah, sure. So we're doing this podcast, right? And we're trying to generate awareness with our customers, our brokers, as far as what we're trying to do with fraud and how we're trying to fight the good fight. But, most importantly, what we're trying to do is really create an awareness within our own group and the examiners by having weekly calls with Jen as far as potential cases about talking through some of the things that they're seeing. And then also having that knowledge with the claims that are being assigned to them, and then expressing to the insureds and so forth about things that we're doing as far as our investigations and so forth. It's really sharing experiences and knowledge with our own examiners, our examiners sharing it with the insureds and the brokers they work every day. We have a customer service directors like yourself, Lisa, that deals with brokers and insureds that, says, hey, this is what our claims department is doing. And I just want to point out, too, here in Berkeley Environmental, we handle our own claims. We don't use TPAs, third-party administrators. We write the policy, we adjust the claims. So we really have a vested interest in how we investigate these claims. We have an equity and ownership in these claims, unlike hiring this out and having a TPA do it, a third party that has no employees with Berkeley Environmental and so forth. So we take an ownership in it. And it really means a big deal to us that our insureds are aware of the fact that we're fighting for them. And we only want to spend the money that we need to spend. That's very important. And that's a message that we're just trying to get across every single day. Jen, I would appreciate any real life examples you could share, workers' comp, auto, et cetera, because people really love examples and hearing about the things that you've actually done.
Yeah, absolutely. So surveillance plays a key a lot of times in overall, just to kind of figure out as an examiner, even seeing if it's even consistent, right? So is the injury and then the impairment and the things that they are not able to do any longer are even aligning. I think it's interesting from just an awareness situation. So people are aware that sometimes you have where the actual injury, it never occurred. The loss didn't occur. And sometimes, some of the policyholders will have video that are in these locations and can identify the fact that on that date, at that time, that did not occur. So those are obviously the ones that are much easier to handle. And we do have those because from a fraud perspective, date and time stamping of these videos are going to be very crucial too. There are additional investigative steps that we do take as well with statements and things like that. But then you have the other scenarios that really in cases of where you do have, and we've had these exact examples where the injuries are more severe, they did occur. But then it's what I consider the life cycle of the claim. So what happens is it's not at the front end. and which is more common, like you'll see in the auto side. It's more through the middle towards the end of the claim where, like I said before, where there's inconsistencies in what they're stating their potential for their impairment is. Are they able to do this? Are they not able to do this? Are they working while collecting? They're saying they're not able to work at all. Surveillance plays such a key role in this and finding that out. And in doing that, specifically in some of the scenarios where there's been success on the environmental side, has been the fact that it's not only just the surveillance, the actual footage helping, it's the whole pre-surveillance too. So from an investigation perspective, we really have to have true knowledge of the person that we believe could potentially be committing the fraud. So we want to know more about that person. What is it that they're doing? What are their hobbies? What is it potentially that if they are working while collecting, what is that other job? So there's a whole mechanics behind figuring out and making sure to check and see whether or not they're being consistent in what they're reporting. In these cases where there has been success was the fact that we were able to get surveillance footage to confirm that there was working while collecting. A lot of that, like I said, has to do with the fact that there's a lot of pre-surveillance workup and then the fact that you're able to get the footage. So whenever we're doing surveillance here at Berkeley, we want to make sure at all times that the information and footage is being done lawfully and legally. I can ensure that is occurring. So that's the one thing that we, like I said, from a fraud perspective and also the awareness, a lot of that information also, the intel comes in from parties that worker may know from the work environment. So they may know that they're doing this because they may be friends outside of work. So from just another like fraud tip perspective, that's also additional information. It doesn't finalize and conclude that there's fraud, but it just lets us know that there's a higher potential that that person could be doing something else. And that's where the fraud comes in from the life cycle of the claims.
There's always, we get a lead sometimes on somebody calling and stating, hey, so-and-so is getting benefits and they're defrauding you. A lot of times people obviously don't want to give their name, but they give the information and then we act upon that. And many times that's where we get our leads, right? Maybe, I don't know, it's somebody that has an axe to grind with somebody that is collecting benefits, which they should not. Yeah. And they feel as though they want to reveal this person for whatever reason they have.
So at Berkeley, we do any fraud tips that do come in, we investigate all of them thoroughly. We do have to do our due diligence, evaluate them, and see whether they're, correct or not. Now, I will say, like I said, we've been seeing quite the increase in fraud tips overall over the last few years. And they're very important because even though maybe not all of it might be completely accurate, there's still a portion in there. And it's only that portion that we need a lot of times to prove that that person is trying to commit fraud.
I was just going to comment on the customer perspective, whether it's auto, workers' comp, whatever line of business, they're the ones that are really seeing things firsthand. So we really want to encourage all of our customers, anybody involved in the claim, if you see something, say something. It may not be anything, but those little tips, like you said, Jen, each of those little tips may add up to something that really creates that red flag, gives us the knowledge then to realize that something may be off. Been involved in several situations where, a customer kind of later in the claim, they're like, oh, and by the way, we heard whatever it is about the employee, right? It may be locker room talk, water cooler talk about what people are doing on the weekends. Again, that doesn't mean that there's fraud, but if there's a discrepancy between what the person says they can do versus what we actually see them doing, then that's certainly worth exploring further. So just can't emphasize enough the importance of a customer sharing that information with us so that then we can take the ball and run with it.
Well, a lot of times, we'll see scenarios where sometimes it is a family member, sometimes it's a neighbor, and sometimes it's people you're working with who then at that point in time, if you think about it, they're having to take on extra workloads and stuff like that. And they're like, wait a second, this guy's been out of work or this lady's been out of work. And I know for a fact that they're able to do this, this, and this. And so a little bit of information, but then, like I said, we can come in and follow up and confirm and validate whether that is actually true or not. And luckily, like I said, once again, with the legislative backing and having these laws in place is what allows us to be able to make a difference. I always mention this with the legislative pieces too, because it really does play such a huge piece in trying to combat fraud. And this comes right back to NACB again, Coalition Against Insurance Fraud. These are two organizations that really help in getting that information to get this changed. It happens state level, but a lot of times what you start to see too is that another state will see that there is success with that law, and then it can spread throughout to the other states. Just those law changes that might be very minor to some people, it can really truly make some type of an impact. But I will say what we're seeing is that when the law changes in certain states, it then creates a movement, like physical movement, where those types of people will then move to another state where that law doesn't exist. And so then you're kind of playing like a whack-a-mole situation because it's spreading and moving because this one locked it down and then this one, So we have to be aware of that. And that's part of, like I said, goes back into our data tracking with patterns.
Can you give us an example of one of those situations that you were involved in where you were able to identify a crime ring? How were you able to identify it? How big was it? Is that something our customers need to be aware of, that they are targets for these organized crime rings?
So major cases where you have multiple claims that fit a specific pattern, this is where we start to look into like link analysis. And so we're trying to get an idea of exactly what is the organization of this. Do you have a center to this? I've worked some, organized ring activity where it literally is a circle, right? Because you have multiple different people that are involved or entities involved, but there's no center core to it. But then you have others that look like a triangle. And so you've got your top and then it goes like this. So you have to identify what it is. Now, commercial vehicles can be a target. And the reason why they're a target is because there's going to be higher limits, right? People just automatically, associate commercial with higher limits versus hitting someone with personal limits. In scenarios like, we'll take New York, for example, or you can even take Pennsylvania too, because I've worked stuff in Pennsylvania as well, where you've got a situation where everyone has to parallel park. The commercial vehicle, it's very tight already, is trying to get through. They're driving along, and then all of a sudden, someone that's parked on the side goes ahead and pulls either to the side or in front and gets hit, or doesn't really get hit, but says they got hit. Or even, let's just say that they're doing a drop, the commercial vehicle is dropping off supplies and they're unloading. So they're already kind of having to manipulate through because the street's already narrow enough. Well, they're just a target because they're being watched. You may have only had one person in the other vehicle that's setting this up, but then all of a sudden you start getting all these other people that said that they were in that vehicle when it was hit and they really weren't, or they were in there. We've had situations where we've actually had camera footage that shows that you do have people in those vehicles. But then when you start getting statements and you start asking, they don't know each other. There's another indicator. Why did they not know each other? So you rule out the fact that it's not a carpooling situation. It's not some type of a taxi scenario. So why are people that don't know each other are in the vehicle? And then what you do end up finding is they end up going to the same providers, medical providers. They get the same representation by a law firm. They all had the same injuries. When you start asking more detailed questions, you start to find out that they didn't know where they were before. They didn't know where they were going. They don't know the people. You'll start to see all these inconsistencies in that. Then also we start to look at damages. Do the damages to the vehicle align with what would have occurred? So in commercial vehicle scenarios, specifically here at Berkeley, what we've seen is we'll have a driver. We will confirm with our policyholder that maybe that employee specifically has been, they've worked a long time for them. They've got a good record. They don't, nothing. And they're saying, I never hit this car, or I never hit this SUV or whatever it is. And then when you start to look at the damages, you can see that the damages that are being reported on the other vehicle are not consistent. We've had several scenarios like this where the damages are not consistent. When we do the history on the vehicle, we find out, like I said before, that it's a prior salvage vehicle, or it was involved in a prior loss. They just got ownership of the vehicle, or the owner of that vehicle is nowhere in the accident. Why did they have the car? So there's a lot of different things behind that. And I think from fraud detection, perspective, obviously we're looking at specifically, is there a connection with those providers, those people, and the law firm? And then for the examiner to just have awareness is the fact of the inconsistencies of how the information is coming in. So if you have a police report and it doesn't have anybody on the report, now it's going to depend on the state. Some states, if one person is reported injured, then all of them get listed. Others may only be a driver's exchange. So you're not going to see all the parties that were potentially listed in the vehicle. So it's just going to depend on the state law on how those police reports are populated with the information. The other thing to keep a heads up too is that a lot of the reporting law enforcement agencies, they have driver's exchanges on their website, on their main website. And someone who's trying to commit fraud will extract that report and do what we call a paper loss. They just fill it out and say that it happened when it really didn't happen. So that's another scenario that we have had here at Berkeley as well. So there's different scenarios within the auto accident perspective.